OYO rooms over the last few decades has changed the way the budget hotels and the budget hospitality industry in India has functioned. The company's dreams of coming out with an IPO and getting itself listed, however, have not been as successful. Earlier this year, in January, the SEBI actually returned the IPO papers of OYO and asked us to refile. Very recently, IPO has shown its interest to refile the draft papers and is hopeful to be able to come out with an IPO in the February of this year of 2023. Hello everyone, welcome to iExamB, the only platform that helps you unfold your potential by helping you understand and clarify and build your concepts so that you can prepare 50% faster for all the exams and also be more confident in your preparation going forward. In this video, I am going to talk about SEBI and its role in the IPO papers, which we more commonly call as prospectus, which is used in the IPO process. So let's go ahead and understand the entire process and what is the SEBI's role. SEBI, as you are aware, is the capital markets regulator in our country. So as the regulator, what are the key functions? The three key functions which SEBI performs is to protect. And protect what? They protect the interest of the investors who are present in the capital markets, their interest to be protected. Second, it develops the securities and capitals market and also regulates them so that they function in a transparent and uniform manner. So I am going to discuss today's video more focusing on its role of protection of the interest of the investors. So being a regulator and a protector of interest of the investors, SEBI ensures that any company which is trying to raise money from the capital markets gives very transparent and full disclosures of all the information that an investor should have to be able to make an informed decision. Thus is the role of the offer documents, which we also called the prospectus. However, prospectus goes through various stages before it actually becomes that final product which the investors can use to be able to make an informed decision. So when we say that a company wants to raise money from the market or from the public, the process is known as IPO, which stands for Initial Public Offer, right? That is the first time they are reaching out to the public to raise funds. So what are these documents and what is the process? As I go ahead, let me also tell you about the weekend offer that is going on at iExamB, where all the courses of iExamB are available at a flat 55% off. If you want to avail this offer, you can use the code weekend on our website. So if we continue with the IPO process, when the company first decides to come with an IPO and raise money from the public, their intention is set in place, then they have to make the offer documents. These offer documents are like an advertisement of the company to be able to tell what the company does and why they need money so as to be able to attract investors for raising money. So these offer documents take the form of prospectus in case of IPO. But before they can be called a prospectus, they are known as DRHP, which stands for Draft Red Herring Prospectus. Okay. It is known as the draft because it is not final yet, it is in the draft format, and red herring prospectus just refers to a prospectus which is yet to give you full details with respect to the price of the issue or the quantity or both. Right, so this is known as the red herring prospectus, and in the draft format it is draft red herring prospectus, very commonly referred to as the DRHP document. Okay, so this document is very, very important because it makes a lot of disclosures related to the company which is trying to raise money, and these disclosures are governed by certain laws and regulations in our country which are specified under the Companies Act and also given on SEBI's ICDR regulations. ICDR regulations are the regulations given by SEBI in respect of issue of capital and disclosure regulations. So these are stated in this particular regulations and the Companies Act. If I broadly tell you the types of disclosures that have to be made, they cover various aspects related to the business of the company, what business they are doing, details about that, and also the industry overview in which that particular company is operating. So for example, here if we are talking about OYOs, then what is the business of OYO, how they are running their business, how they are earning, what kind of expenses they have, and how they earn profit. So that will be detailing the business, and then the industry, which will in this case be the hospitality industry and the hotels industry. What is the overview, what kind of demand growth is expected, what are the challenges that in this industry faces, what are the other competitors. So an industry overview is presented. Then there are details related to the promoters of the company and the management, key personnel in the company who are running the business, the board, who are the people who have promoted the company, what is the shareholding and the capital structure of the company. Then there is the financial information related to the financial audited financials, and also giving certain key ratios which summarize the financial performance of the company in terms of their profitability, in terms of their liquidity, in terms of their solvency position and all. Another very, very important segment that is covered under the offer documents are the risk factors. The risk factors basically tell the various kinds of risks that this company faces, both external and internal, so that an investor can understand and analyze whether he is ready to take that kind of a risk by investing in this company or not. So this is a very important and a detailed segment separately covered under the draft red herring prospectus or the prospectus when a company decides to come out with an IPO. Another important part is the use of the proceeds, or is also known as the object or the objective for which the company wants to raise money. They have to clearly define what they will do with this money, and SEBI has separate guidelines as to the percentage of money that they can divide for various kind of objectives that they have to lay out in the prospectus. And then there have to be other important information that will be instrumental and critical for an investor to make an informed decision. These can be related to any kind of litigations that the company is facing or is involved in, and any other such important information. So these are the kind of informations that have to be disclosed in a very transparent and detailed manner in the prospectus when the company decides to raise money from the public, right? So after this, what happens is this document as first goes to SEBI and the stock exchanges and the lead managers of the issue, and SEBI actually vets the DRHP. Vetting the DRHP, that means they go through it, to check whether, and reviews it to check if all kinds of disclosures that should be given to a prospective investor have been covered or not, and correctly covered or not. This is how SEBI is ensuring the protection of the investors. There are various guidelines already been stated in the ICDAR, and by SEBI vetting it, it is ensuring that they are not just stating the regulations and policies, but also making sure and checking whether they are being complied with. Usually SEBI gives its observations, usually they take 30 days approximately, and then their observations and views are put in the public domain for people and their comments, which is open for at least 21 days. It could be more, but at least 21 days. SEBI may issue their observation letter and reviews, and they may typically issue this observation letter within 30 days of a satisfactory reply from the lead managers and the company related to any kind of observation that SEBI may have made. After this, if there is no changes required to be made in the DRHP, then the company can use this as a red herring prospectus to actually go out and come out with an IPO, and they have approximately 1 year from the date of SEBI's approval to come out with an IPO. So in OYO's case, OYO had actually filed their IPO, their draft or the DRHP somewhere around September 2021. This was the first time they had filed. However, they did not come out with the IPO because of the volatile conditions of the market being faced in 2022. So they had actually deferred their IPO even after filing it for approval to SEBI in September 2021. Because of a long time gap and a lot of business developments taking place at OYO, the company, OYO actually filed updated and addendums to their DRHP with SEBI recently in the month of September and October 2022, which when SEBI reviewed found lapses. They found lapses in some of the informations that the disclosures had to be made with respect to the risk factors, with respect to information related to litigations, with respect to key performance indicators that have to be used and now disclosed as a part of SEBI regulations. So the SEBI found lapses and has asked OYO to update their offer document and DRHP to include important information and disclosure with respect to these facts, and therefore refile their DRHP. So this is how SEBI performs its function as a regulator in the IPO process. In general, if the approval takes place and the company decides to come out with an IPO, they have to file the RHP, that is the red herring prospectus, with the registrar of companies. And after this, they can come out with an IPO. They have to disclose the price band that has to be used in the IPO at least 2 days before the issue opens for subscription. And once this issue is open, it needs to remain open for at least 3 days for the public to subscribe to the issue. So this is how smoothly, if no adverse observations are made by SEBI, this is the process that can be followed by any company in terms of their offer documents and using it to raise money. As I told you, for the objects clause, SEBI had come out with certain guidelines as to how the proceeds raised from the IPO should be used. These new rules related to IPO and proceeds were issued in October 2022. One of them relates to how the money has to be used, where it was told that if the company has not identified any acquisition or investment target, in that case they cannot use more than 35% of the amount raised for the acquisition and for general corporate purposes together. And in case they have not identified an acquisition target, then the money to be spent on any acquisition cannot be more than 25%. So these new guidelines were there, and there were many more in terms of also monitoring the usage of these proceeds that have been raised. For more details as to the new rules of SEBI for IPO, we have discussed this in a video by Shikha ma'am, which was there, the link of which you will find in the description box, so you can refer to it to know all the other rules related to IPO that SEBI had updated in October 2022. In the same month, in October 2022, SEBI also introduced a pre-filing mechanism for the offer documents. This is an alternative and optional mechanism which the companies can use for the purpose of IPO. This is also available on this website of SEBI for details as to what pre-filing of offer documents means and how it can be useful to the companies. So if you are aware of this, please write in the comments box what this pre-filing alternative is all about and why it has been introduced. And if you are not aware, please write in the comments box if you want to know in detail in a video related to pre-filing alternative being introduced by SEBI. So that's all. I hope this has helped you to understand the importance of offer documents and how SEBI as a regulator is always present for the protection of the investors and to ensure that the markets work in a smooth, transparent manner for everybody to have equal footing to make investments and gain from it. So that's all. Thanks everybody for joining in. Please don't forget to subscribe to the channel and press the bell icon for more of such videos. Thanks everybody and all the best.